Adani Power is India's largest private thermal power producer in the country. The company is currently worth around 2.26 lakh crore rupees. That's its market cap. The price of one share is 589 rupees, book value approximately 146, and the stock PE is around 17. So, what does it actually do? What does Adani Power actually do? Now, the business model it revolves around it revolves around thermal power generation. So they generate power through their thermal power plants, and these thermal power plants utilize coal as the uh, raw material, the resource. So they produce this power and they sell this electricity under long-term purchase power agreements. On this long-term purchase power agreements, they sell them to state boards and various governments. As of now, as of now, they have an installed generation capacity, power generation capacity of 16,850 megawatts, including or along, including a 40 megawatt solar power project. We can see here. So total capacity as of June 2024. So a year outdated, 16,850 megawatts. Now its major thermal power plants are located in Mundra, Gujarat. Here we have 4,620 megawatts. Then we have Tiroda, Maharashtra, 3,300 megawatts. Then we have a thermal power plant in Kawai, Rajasthan, 1,320 megawatts. Then Karnataka, one in Chhattisgarh, another one in Chhattisgarh, Jharkhand, and of course a 40 megawatt solar power project located in Kutch, Gujarat, and it sells them through a mixture of long-term power purchase agreements. So power purchase agreements are basically contracts. They can sell them to electricity boards, they can sell them to governments, and these are if they're long-term contracts, it will specify what amount are they supplying, what price are they getting per watt or per unit of electricity. It's all mentioned there. And if you're seeing these merchant sales, like power purchase agreement and merchant sales, because merchant sales basically is there will be a portion of the electricity that they don't sell under these agreements. They will sell them in the open market on the price determined on the market. So if there's a, let's say, a substantial and rapid spike in the price of electricity, they can sell them at that price to benefit from such price differences or such price discrepancies. So moving on, yeah, now around 87%. So March 31st, 2025, approximately 87% of Adani Power's operational capacity was 17.55 gigawatts. So it's now 17.55 gigawatts as of 31st March 2025. The early one was of June 2024. So 87% of its operational capacity is under these long-term and medium-term power purchase agreements. So if majority of revenue is coming from these power purchase agreements, meaning there is stability in revenue, because of course, and agreements, the prices have already been mentioned. So a lot of revenue, a lot of its revenue will be recurring, that is recurring again and again, and will be very stable. And the other, of course, 13% will be coming from merchant power sales or mostly merchant power sales. So how is Adani Power doing financially? Okay, we are back to here. Here we can go in the profit and loss section. And here we are. Now, this is a sales and the sales growth all mentioned in crores. So March 2014, 15,328 crores. So let me here. Yes. On March 2025, 56,203 crores. So as you can see here, revenue growth, double digits. You can come right here actually. Compounded. Now, this is annualized sales growth over the past 10 years, a very nice 12%, 16% annualized sales growth over the past 5 years. Last 3 years, 27%, because the profit growth. The last 12 months, the profit declined, but not operationally. I will explain that maybe later. in another video. So, profit growth, last 10 years, its profits have grown at an annualized rate of 28%. Very impressive. Moving here, we can see this OPM percentage, that's the operating margin. How profitable is it operating? How profitable are the company's operations? So 30% we see, this is of March 2014. So if you move forward, you can see operating margin is 38%, 36%, 26, 36, 33%. So it's now reaching in those 30s as we had seen earlier. Oh, spoilers, wrong section. Yes. So earlier, as we had seen, the operating margins were at 25%, 30%, 25% or almost reaching 30%, but now they are in the constant 30 percentage points in that spot of the constant 33, 36. And right now it reached an all-time high of 38% in March 2025. It posted a profit of 12,750 crores. This is pure profit after paying taxes. They actually paid taxes. Here we can see 38% operating margin, EBITDA around 21,418 crores. So moving on, uh, spoilers. Yes. Now let's see how good is it doing financially. And now financially, we are talking about credit risk wise. If you can see right here, yes. Now, see this blue line, or this one, where these numbers are marked, like 5.52x, 3.191x. The blue line connecting these marks. This is the net debt to EBITDA. Net debt is total debt minus cash balance, and of course, EBITDA, we have already seen. So, in fiscal year 2019, net debt to EBITDA was a very high 4.54 times. Then, in 2020, it was 5.52, a record high. Now we can see that net debt to EBITDA is reaching 1.28, is reaching 0.94. It's currently, as of 2025, it's 1.28x. So it seems that debt is becoming a less issue. Not a not nothing like it's not significant. It's becoming less and less significant for Adani Power, meaning it does not need that much debt. It's not that much reliant on debt anymore. Moving on, we can see the EBITDA, of course, we saw that was constantly increasing, but you can see here gross assets is total assets. It currently has 1.13 lakh crores in assets. You can see gross debt has also increased, currently around 37,872 crores. However, now if we see gross assets to net debt, this ratio, gross assets to net debt, it has increased substantially, meaning assets of the company are increasing at a way higher pace, faster pace than its debts. Then equity deployed as a percentage of the assets, 42%, 44%. It's also rising. Now it's 73%. Now, a higher equity deployed as a percentage of gross assets means more of this assets are being acquired through equity and less is being financed from debt, as I understand. So basically, debt is becoming less and less of an issue. A smaller percentage of Adani Power's assets are being acquired from debt. And of course, it means that interest payments will also be less of an issue. So it seems that maybe things like defaulting on its loans will become less of a risk from now. Moving on, we have its return on assets. Now, how are these calculated? Now, these are calculated by EBITDA upon average gross assets. Here we can see return on assets average in 2019 was 12.79%. Now it has increased to 23.35%. So It's making more returns on its assets. Return on its assets are increasing, meaning its operations are becoming more efficient. The company itself is becoming more efficient. And one last thing we can see is the future. So in the future, Adani Power, it's aiming for a 30.7 gigawatts operational capacity, total capacity by 2030. So this is 30,730 megawatts or 30.7 gigawatts of total capacity by 2030. So capacity expansion. So Adani Power is targeting a significant increase in its thermal power capacity with plans for 12,520 megawatts of expansion. So currently, we saw it was 17 point something megawatts. It's going to add 12,520 megawatts by 2030. Also, while going for this expansion, expansion in capacity, it's aiming to improve its EBITDA margins through captive coal mining and of other operational efficiencies. So it seems that it's planning to expand how much electricity is producing in the future. By 2030, it's planning to expand to 30,000 gigawatts, as we saw, while maintaining its nice fat uh, operating margins. So I guess that's it. Hope you liked it. Part two may not come. Have a good